Hi Fools, welcome to another video from the Motley Fool. I'm Owen Benelak. I'm here to do a SWOT analysis of Sainsbury the supermarket. Now, SWOT analysis allows you to kind of see where a company stands in the environment in which it finds itself, and also the strengths and weaknesses that it's got itself in its own business, and basically get a flavour for how that company might respond, where it might go. It doesn't really tell you whether the shares are a buy or not, but it gets you away from thinking about the share price, thinking about the business, so that has to be good. So SWOT, we've got strengths, weaknesses, opportunities and threats. Let's start with the strengths. Always good to start on a positive note. Sainsbury's has a pretty nice brand, I think. I don't think it's as confused as Tesco's about that. I think people think of Sainsbury's as a fairly, not Waitrose, but a bit more upmarket when it comes to supermarkets kind of brand. It has a bigger concentration of stores in the south, and the south of the country is where the money is at the moment, so that is good. If you don't believe me, ask Morrison's, because it's got more stores in the north and it's suffered for that reason, whereas more stores in the south, Sainsbury's in a stronger position. Sainsbury's has the Nectar card. This is its loyalty program, which it can use to encourage people to come back to the stores, and it can also use it to basically make sure the right stuff is in the right stores, so it can, basically figure out what we need before we can figure it out for ourselves. And then it has a pretty sizable online business. I think it got to £1 billion last year. It's probably a bit ahead of that now. It's only a small part of a £25 billion business, but again, I don't want to say Morrison's again, but I'm forced to. Morrison's doesn't really have an online business. So those are a big bunch of strengths, and it's not hard to see why, even though it has been beaten down recently, Sainsbury's is kind of perceived as the best performing supermarket at the moment. If you look at its weaknesses though, it does have weaknesses. Specifically, its margins. These are lousy. They're a bit above 3%. That's pretty much the worst of the supermarkets. Whether the others will prove to be a bit unsustainable, we'll have to wait and see, but at the moment Sainsbury's has already got fairly low margins. Another weakness is it has no overseas exposure. It doesn't really have many levers to pull in that sense. If it started making a lot of cash, if it's got its margins up, it would pretty much have to dole it out to us as shareholders, which is not necessarily a bad thing. But Tesco could take some of that money and invest it overseas, for instance, and possibly grow it more rapidly over there. If we now go on to opportunities, Sainsbury's has a lot of property. It's about nearly £12 billion of property. Compare that to a market cap of about £6 billion, maybe even a little less. You can see that it could unlock some of the value of that property, and it could use it to boost its business, basically, and arguably that is what it should do. Another opportunity that it has is, even though it doesn't have a lot of big levers to pull, it thinks it can add some more stores. It reckons it can add 1 million square feet to its kind of floor base this year, and if it does, then it will sell more goods and will make more money. Then finally we come to the threats. Well, there's two big threats. Firstly, there is the small matter of a supermarket price war, which is either imminent or has kicked off, or you're already being blown to bits by if you're Morrison's. It depends where you stand in the country perhaps. But I've already noticed, when filming this in the south, that Tesco is cutting prices. Sainsbury's is going to have to follow suit, and it doesn't really have the margins to kind of go crazy in a price war. So it might, for instance, need to raid its property to keep up with the others there. That's definitely a threat. And the other threat is that Justin King, who has presided over a good number of years of sales growth, years and years of it, I want to say 36 consecutive months, but it might be a month or two out, he is off. So, there's going to be a management transition. That is always dangerous, particularly in the middle of a price war in a very competitive environment. So that's kind of the SWOT analysis of Sainsbury's. Have a dig around and see what you conclude.